everybody, Tim Knight here, and today is the last day of the quarter, the last day of the first half of the year, and it's a shortened week. We're going to have a full trading day Tuesday and Wednesday, and that's kind of it. We get a few hours, half day on Thursday, and that'll be it till the following Monday. So we'll be well into the summer doldrums at that point. The market, as seems to be required by federal law, is at lifetime highs again. With the exception of the small caps, which is kind of my obsession, small caps remain down double digits from their lifetime high, unlike just about everything else, which is at lifetime highs. And I've got a bunch of symbols loaded and a few things to talk about. So let's dive in together and catch up on the charts. Here's the spider. We are hanging out exactly at the midline. This, as I've mentioned before, there's a channel that goes back a full 16 years. And of course, that channel has a lower line and an upper line, and right down smack in the middle, 50% is a midline. And that's exactly where we're at right now. Here's the channel all the way up. We're bang right there at lifetime highs, yes, but at that midline. We'll see if that exhausts itself. I just read that this is the fastest recovery ever from a greater than 15% drop off. Never in history have we seen anything bounce this fast and this hard since those April 7th lows. So that's worth remembering. One little blip we had on Friday was, of course, the news that Canada was going to have a digital tax. And Trump said, well, trade deal's off. And over the weekend, Canada's like, never mind. And Trump's like, fine, never mind. So let's talk some more. So with that, EWC, the Canadian ETF, is at record highs. We've jumped on this one after a very brief, literally like 2 or 3 hour slippage on Friday. But yeah, lifetime highs on Canada. Longer term, a little more domestic, here's the EWC, not EWC, this is the ES, the S&P 500 futures going all the way back to their creation. This was a bull top here, a bull top there, and then the everything bubble, which began in 2009 and has been really pretty much uninterrupted since then. The only pauses in the everything bubble has been, of course, the COVID crash, which lasted literally just a few days. In fact, if you count 2 or 3 days, that was almost the entirety of the COVID crash. Then there was the, I don't know what you want to call it, but basically the Powell tightening for a little while. We had a drop late 2021, pretty much ending in June 16, 2022. There was a nominal low in October 16, but you pretty much got a 7-8 month bear market in this vicinity. And then after that, it's just been straight up. So here we have it. We are the Fibonacci's on this did a fine job calling the bottom right there, bang, like to the penny. And then they had another drop, which also bang pretty much to the penny. After it slipped above this fib, it just rolled its eyes and blasted forward. So we're above all of that. At some point in the future, when it's clear that we've got another top, we can drag that anchor point higher. As it is now, it's just kind of there as a interesting little memory of times past. Not really useful at the moment. In Q, it blasted above the fib earlier than its compatriot there. But here too, we had a nice bottom here, bottom of this zone, and then another one here. And then once we cross this highest segment, zoop, up we go. I would also point out, interestingly, this also has a channel, the NQ. There's the base way down there. This goes back not as far. This goes back to the start of 2023. So there's the lower line, the upper line, the midline, and we are tagging the lower line now. In other words, it's a shorter term channel. We've stayed below the channel ever since last, about 3 months ago, early in March. So we broke it early in March, and we fell, push, and we are tagging that for the first time in about March, April, May, June. Yeah, about 4 months we've gone through. So just saying, worth noting. As I mentioned, the Russell is not at lifetime highs, unlike all that other stuff. And as I've mentioned repeatedly, but just bears repeating, there's an analog going here still, in which we have this distribution top and this distribution top, this bullish reversal and this bullish reversal, and we're kind of at the moment of truth right now. Last moment of truth was right back here, back in March of 2022. Here we are with this one, and it's unclear yet what's going to happen. It keeps teasing it, but it doesn't break through. The peak on this so far has been what I call the CPI high at June 11. And we've got very close to it last Friday, very close to it today, but it has not followed through in spite of a lot of strength elsewhere. At this moment, the RTY, for example, is up half as much percentage-wise as the NQ. So it's still acting like a laggard. And if for whatever reason this weakens away from that dashed blue line, maybe this has a shot of actually doing what I'm hoping it'll do, which is ape the behavior it had back in the spring of 2022. Here's the IWM itself. Those same markings are shown here on the ETF. And as you can see here, we're just kind of hanging out below that dashed red line. So this is the sort of you are here moment back in late March of 2022. What else is going on? I just in passing, I mentioned the diamonds. The diamonds are not at lifetime highs, and it has gone awfully far, awfully fast. As I said, record recovery. And it seems to my eyes that it's going to take an astonishing amount of extra power to push it past those peaks right here. There's a lot of uncertainty now. The big, beautiful bill, is still floating out there, uncertain whether that's going to pass. They're trying, and July 4 is this kind of symbolic day, I guess, for it to pass. So that's been telegraphed loudly that it must pass by July 4. But as with all the other deadlines, I don't think it really matters. I mean, there's this July 9 deadline for the trade deals. I think that they will happily just say, oh, well, we really meant the 19th. We're going to give them 10 more days, whatever. All these artificial deadlines are just that. They're just, PR. I don't think they're really going to say, like, all right, BBB didn't pass July 4. We give up. No, it's not going to happen. But there's the trade deals. There's the big, beautiful bill. And, of course, just this touch of geopolitical uncertainty. Palladium got smacked down pretty hard. It actually was quite strong at times on Friday and Sunday and so forth. But short term, this has been smacked down pretty badly from the zip higher we had on Thursday. It is a very understandable retrace to the base. I would say that the first important line of support is down here at 97.70 on PALL. But yeah, that's backing off from its strength late last week. But long term, it still looks fine. Over in quantum land, it's a mixed bag. ARQQ down 5%. Qubits, on the other hand, is up 3%. And I say again that this is, I think quantum has its, is obviously very speculative, but as a chart, this to me is still the best looking chart. QUBT is up quite strong, and it's just sealed up its gap. So it'll be interesting to see whether or not it pushes past that or not. This has been a very strong performer, but I think that it's more vulnerable simply based upon the fact that it gapped down and it sealed the gap. So QBT seems a little more solid. This isn't quantum related, but I did want to note UMAC, Unusual Machines, is showing some very interesting strength, particularly when you turn on the volume. You can see here it was just trading, a few hundred thousands of shares. Now it's trading in the millions and sometimes even the 8-figure volume. And they're a drone maker. So if you assume that U.S. drones are going to be an important shift away from DJI, et cetera, this might be worth looking at, UMAC. Getting low on time here. Let's pick up the pace. Interestingly, although we're green across the board, almost all my shorts are down today, which is nice. Just a few odds and ends I plucked out. AMD down about 1 2/3%. Caesars CZR down also about 1 2/3%. On Semiconductor down a bit more than 1%. Avis Budget Group Car down a little more than 3%. Delta Airlines down about 0.5%. DLTR Dollar Tree down just a little bit, but that's at a nice, very powerful bounce up to that dash red line, which I'm considering resistance now. HOG, Harley Davidson, This is down about 1/3% beneath that big topping pattern. And one last one. Actually, I'm not in position on this one, but I just wanted to mention it. Roblox, RBLX, down just a touch. It has gone very far, very fast, and very richly valued. It's hard to conceive it's just going to keep trumping higher like that. It seems that move, I would say, is close to the end. But again, no position on that. As far as crude oil goes, we're down about 1% on CL. Of course, the mayhem from about 9 days ago is a distant memory now. So we went blasting higher, cut above this trend line, collapsed below it, and now we're just kind of hanging out. Wednesday, Thursday, Friday, Monday, barely moving from the support level like so. So if we can cut below that, I think that really reintroduces the prospect of this right triangle pattern failing. I'm short XOP. This is down just about 1%. So yeah, that's energy. On a very different industry, I would also mention semiconductors. You may have noticed a lot of my shorts are semiconductor related. This is SMH itself, whose lifetime high were very, very close. But again, it'll be interesting to see if it has the renewed energy to push past that level. It hasn't done so thus far. Over in crypto land, Bitcoin is doing a whole lot of nothing. We're just kind of hanging out at a level that we saw 6 or 7 months ago. Back in December, we were at this exact same price. We felt hard, recovered it all, but we've been kind of lingering in this little wave. So I just want to point out that 7 months have transpired. We're pretty much at the same price after this just explosive move higher. But in spite of the fact we're barely budging, MicroStrategy, MSTR, is up almost 6% today. And so the spread between strategy and Bitcoin itself, and remember, strategy pretty much is their Bitcoin holding company. It's interesting that this spread has gotten so large. You can see starting around February of last year, they were pretty much in lockstep, but then the spread's getting wider and wider and wider for whatever reason. I call it the Saylor premium for Michael Saylor, but it's just worth noting that spread's become kind of a chasm. Just to wrap things up, Russell 2000 once again. There's the cash index itself. Same deal. I don't know if this will resolve this week in terms of pushing past the red line or succumbing to that force, but we've only got about 30 minutes left of selling left this H1 2025. So we'll see what happens Tuesday, Wednesday.